Sameer Narayan now joins us. I'm going to take the conversation forward on why and how much more some of these NBFCs will fall. Sameer, one side is compulsion, second side is reality. Is the selling in India Bulls, Yes Bank, Diwan Housing overdone?
Nikunj, if you look at the exposure, I think the problem is quite large because the average NBFC plus HFC exposure of, let's say, only the mutual funds is close to about 3 lakh crores. Now that is a sizable number viewed in the larger context. So I think that it's not that everything is having an issue, but we need to get confidence as to how much of it is under cloud and what can be done in terms of recapitalizing or getting it to some sort of a stability. So I think the challenge is today nobody knows the extent, and that is what is creating the volatility and the panic.
Would you be a buyer here? Because it's often said that good news and good prices don't come together. Right now, some would argue that it's the prices at which these stocks are trading. Is this an Amazon or a Flipkart sale for stock market which has come 3 months before Diwali?
Well, I think that's a very good analogy, but unfortunately, it's not as great as it sounds because today
Amazon sales are not great. You end up becoming a compulsive buyer. I mean, you end up buying things which you don't want to buy because it's cheap. So let me clarify that what I meant with that question. I never said Amazon sales are good.
Well, I think the NBFC problem is today is also the issue that crops up when you look at the price versus what I'm getting. Is most of these NBFCs had a last half a decade of trailblazing growth, which was essentially funding the consumption, to an extent even preponing it at times. So I think now, because the visibility on the growth going forward of the book is low, people don't know how much to take a haircut on in terms of growth, and in case you see a cost of fund going up, what will it do to the spreads? And the valuations are actually not factoring the risk at all today. So even in case they might be looking like they are down 10-15% from the 52-week highs, is it good value? Well, honestly, the jury is still out.
We're talking about slowdown. Everybody knows on the street that real estate, if I may use the Hindi word, that real estate mein mandi hai. Prices are not going up. People who bought houses have not really felt the wealth effect. But stock markets are telling you, come on, let's ignore all the economic reality. And there is a bull run or a mini bull run in a Godrej and in a Shobha, and also for that matter Prestige. Because when I say the word bull run, on a relative basis, Sameer.
I think the name that you just mentioned, Nikunj, these are companies that are operating in very specific markets, and they have got a very niche positioning in each of them, whether be it a Oberoi or whether be it a Godrej, because people have confidence that the projects will be delivered on time, the quality will be good, and hence even in case they are charging a bit of a premium, people are willing to take it. And earlier we've had this whole real estate bubbles of the land bank valuations, which actually was quite frothy because nothing actually came out of it. Those projects never really got off the ground. So when you look at market, is actually differentiating between companies which are having execution track record, and hence they are having the ability to charge a premium, and market is willing to pay for it. So I think that's where the segmentation has been clearly done as far as the investors are concerned.
Sameer, Trent is a Tata group of company. I think yesterday or day before yesterday there was an announcement which said that Tata Sons are increasing or doing cash infusion in Trent. If I look at the market right now, what puzzles me apart from real estate is this pocket. Trent is not far away from an all-time high. Aditya Birla Fashion Retail, again a classic retailer, is not far away from an all-time high. The reason why I'm bringing this point out, Sameer, is because we are talking about Amazon and e-commerce being the disruptive source of purchase. Yet the Trends and the Aditya Birla Fashions of the world are doing very well.
I think these are franchises that have got their set of very faithful clients. So I think what is happening here is well-run businesses, cost structures are under control, and the franchise is entrenched. So these are businesses that markets tend to like because there the predictability of revenue stream and earnings is at least better than the other of the pack. So I think that is where again the segmentation has been made, that if I have to allocate money in say organized retail, which are the top two names that I will go to, and these are exactly the ones that you just mentioned.
What do you like in NBFC? So you don't like anything?
Well, I think what is going to happen is as the risk starts getting addressed, the safer perceived NBFCs are likely to garner a higher share of the businesses that will flow out of the ones where probably the risk is higher. So it is likely that those bigger guys are going to get bigger. So people will then get puzzled about will the 8-time book go to 10 times, etc. But I think the larger NBFCs should get a disproportionate share of the business that will flow out from when the realignment happens.
Sameer, I saw you smirk while we were chatting with Yogesh about Bharti. What's your own take on the telcos?
I think as Nikunj mentioned that when you see the question about Jio's debt and the overall net debt of Reliance at the consolidated level, when those questions are asked, that actually tells you that soon the price war may be coming closer to the end. And Reliance, after having got about 30 crore subscribers, are they okay with that kind of a market share? Because now as the focus shifts to the revenue earning customers, people would then want that those who are on my network should be willing to give me something for it. So I think once the pricing table stabilizes, penetration is not a long story anywhere as far as the telecom sector is concerned. So it's going to be pretty much how much you get from the customers whom you already own. So I think very clearly the Bharti story has been that they have been deleveraging, they've been ensuring that they sweat the assets so that they can get money for the right kind of capex in their core operations, and that's what the market likes.
Okay. You mentioned earlier, Sameer, that you're looking at possibly OMCs, metals. When you were talking about that, were you thinking of actually getting into some of those pockets at these beaten down prices, or did you have a different thought?
Well, I think OMCs is a good trade for a falling dollar and a falling crude, which probably should happen both in case there is a growth slowdown concern. But having said that, there seems to be something strange that is happening, that if you look at the 1-year trailing return of Dow versus the gold, I think gold is today outperforming. So in an era where people are scared about growth slowdown, why is it that a inflation hedge is actually doing better? So maybe the inflation is being underreported in the global context as well, because when you have global supply chains which are being disrupted because of these trade wars, there has to be some amount of inflation that creeps in to the intermediate capital goods. And I think that's where the stories will still play out, because how the trade wars actually settles, and the gold is actually telling you a very different story. So having said that, the dollar crude, that metric is something that is very interesting, and that's why OMCs will offer a great value play.
All right, interesting perspective coming in there. Sameer, thank you so much for joining us this morning and talking us through some of your views on the market.